Okay, so I'm going to talk about past, present, future, alternative investment and crowdfunding landscape. Now, I'm very good in getting the best out of people and sharing how you can create wealth. Would you like to do that, all of you? Come on, guys. Hello. Yeah? Okay, so let me quickly share with you on a panel today. We have Ali. Ali is Ali Madhavji. He holds an MBA from INSEAD, and he's the managing partner at Blockchain Founders Fund, senior investment advisor at BitBlock Capital and Fiat Capital Fund. And he has served on various blockchain advisory roles, including Polymath. Have you heard of Polymath? Okay. And he currently consults organizations such as the United Nations, and he also has worked across continents with PwC, PayPal, Microsoft, Bloomberg, as well as INSEAD. So, welcome, Ali. We have seated besides him is Yuri. Yuri has multiple degrees in international business and management, such as Harvard Business School, Rotterdam School of Management. He's the founder and CEO of BitBlock Group. Over the past 10 years, he has held various management roles in companies such as Shell, Gazprom, Mitsui, Mitsubishi, Siemens, Dutch Ministry of Economic Affairs, and the list goes on. He has been moderating panels on subjects such as blockchain, AI, Internet of Things, as well as digital identity. And he has spoken at conferences, namely Future Blockchain Summit, Blockchain Day Singapore, National University of Singapore, the Next Web, and today he'll be talking and sharing about how you can tokenize your business or assets for enterprise adoption. Next to him, we have Mr. Nicola. Nicola is a recognized fintech leader in Asia, a co-founder of Crowdfunding, an MAS licensed crowdfunding company offering equity-based crowdfunding as well as peer-to-peer lending. He has over 20 years of professional experience in finance, investment, and technology. He started at Accenture, where he spent 8 years. He subsequently moved to Singapore and joined Standard Chartered Bank as fixed income trader, covering 6 markets across Asia. He holds an MBA from INSEAD and a master in bioelectronic engineering from Polytechnic of Milan. And then we have Ronnie, who's seated next. Ronnie is the co-founder and CEO of Mintrust, a P2P crowdfunding platform, again licensed by MAS, that connects corporate borrowers and lenders. He has over 27 years of experience specializing in corporate and structured finance at international banks. He worked with Standard Chartered Bank for more than 10 years and in some capacity as a managing director in some of the functional areas at Standard Chartered. And then next to me is Sean. Sean is the customer experience manager at Funding Societies, also a MAS licensed crowdfunding company in Singapore. He studied business administration from Management Development Institute of Singapore, business management, marketing, and related supported services from Murdoch University. He was a previously global events and summit operations executive at Salvo Global for more than a year, and he also worked with Singtel for 4 years in various positions. So let's give all of them a big round of applause, everyone. Okay, so we have a panel of distinguished speakers, and they're going to share about crowdfunding, alternative investment, as well as STO, ICO, DSO, and the future of tokenization or crowdfunding. So my first question to the panel is, there are different ways to invest in crowdfunding. So if somebody comes to your crowdfunding platform and wishes to make money, what are the various alternative investment opportunities? So I would start off with Sean from Funding Societies, and then of course I'll move on to Ronnie and then Nicola and so on. Is that okay? Yeah? Sean, do you want to first say about Funding Societies a bit, and then of course, how can somebody benefit, or if they comes to your platform, how do they benefit? What are the opportunities of alternative investments?
Sure. Thanks again for the very brief and kind introduction. So my name is Sean. I'm from Funding Societies. So Funding Societies is a crowdfunding or peer-to-peer lending platform that actually started here in Singapore in 2015. We've recently turned 4. And what we offer to investors, or on the other side of it, local SMEs, are basically business term loans, working capital loans, and some invoice factoring, in which investors could invest in these notes or these tickets, and in return, when the businesses repay them, they are repaid with the interest, and basically investors stand to earn the interest that is being repaid from these businesses. And these businesses, there's a wide range of them. They are small SMEs all the way at times to even listed companies and subsidiaries of listed companies as well. So there's a huge range. And apart from that, I think one of our strengths, or one of the key things to take away from funding societies, is that we're open to almost every type of investor. So we accept retail, accredited, and institutional investors on the platform. Investments in our loans start from as low as $20, and yeah, there's really no upper limit at times depending on the ticket size.
Thank you, Sean. I'm Ronnie. As Kishore has said, I'm from Mintrust, which is also another crowd funding platform similar to funding societies. Thank you to Sean for a great introduction, because this is exactly what we do as well, more or less. so I'll spend probably 2 minutes less than him. But the other thing that we do as well on a selective basis is that we do a bit of equity link or convertible loans type transactions for some of our selected SMEs looking for equity funding rather than just debt. So that's the additional thing. The other thing that we do as well is that we score our deals using our own proprietary rating system, and our investors has become quite attuned to a deal which is rated A, B, C, or D, for example. In terms of alternative investments, I think we always believe that through the platform, through fractionalized investment, individuals like you and I could invest $100, $50 into a deal that is probably $500,000. You know, unlike if you go to a bank or to an investment house, that typically require you to spend a whole bunch of money. But for crowdfunding, people like us, you know, Crowdo, funding societies and all that, we do not need that much. So it allows you to go in and invest, put your toe on the water, test it a bit, and if it makes sense for you, then it could become a great investment. And we always try to tell investors that, hey, you know, you should always diversify. Diversification is important. Invest in as many deals as you can, because like any investments, whether it's STO, blockchain, or coin, or even stocks, you can actually lose money. So do not just be attracted by the high interest rates or high returns, but at the same time, you know, make sure that you diversify. And if you diversify properly, it is, we think, at least in Mintrust, that it's a great investment alternative.
My name is Nicola. I'm the co-founder of Crowdo. Crowdo is similar, interest and funding society. We are crowdfunding a peer-to-peer lending company. We are offices in Singapore, Malaysia, Indonesia, where we are licensed with the respective regulatory authority. I think the best way to understand our asset class is that what we do, we give opportunity to everyone to invest on the private sector, right? So everybody has access right now to banking, brokers, or online platform to invest in listed company on the public sector, right? But very few people, before we came into the business, has access to investment in the private sector, means private-owned company, right? Typically, this type of investment was restricted to people who had private banker, so very high net worth individuals, or institutional investor, or private equity. Now, if you come to one of our platform, everyone, even retailers, can invest on the private sector. Then, which product you can invest to? You can invest on debt, so fixed income type of product. So if you have a very short horizon in terms of investment appetite, and you want to maybe even a bit of risk adverse, you're looking for peer-to-peer lending, where you can invest in loan and you can get repayment on a monthly basis, right? On a duration that probably goes from 6 months to 1 year. If you are a bit more like a risk taker, you're looking more, instead of a fixed return, you're looking for capital appreciation, you can invest in equity, again, on private company. There you're looking for an horizon of investment 3 to 5 years.
Yuri and Ali, my question to you would be slightly different because funding societies and Mintrist and Crowdo has a crowdfunding platform, so there are a lot of available instruments over there for someone to choose from. But if someone would come to the two of you and ask where would he or she want to invest the money, would you advise them ICOs, STOs? And if yes, how will you educate them in terms of telling them how should they value an ICO or the price point? Because both of you have got experiences and functional knowledge in terms of executing an ICO as well as an STO. So perhaps you may want to share from that point of view.
Sure. Yeah, so I think the introduction was already made well, and I was in the panel this morning as well. For those of you that saw me there, it's probably a little bit of a double intro, so I'll keep that short. But we're developing concepts and products for large enterprise. So I'll leave it there as for the introduction, the rest can be found online. When I go to ICOs and STOs, for those of you that are not very familiar with the concept, the ICOs were pertaining to utility tokens. So it was a new way of transacting value. And that really happened and mushroomed up in 2016, 2017. So a lot of money was raised. It was almost 4 or 5 times venture capital amount of money. And that was an experiment. It was a successful experiment to a certain extent. But that cycle of raising money through an ICO has sort of been coming to a halt, grinding to a halt, because it was mostly retail investors getting in, and now we're in a time where regulation gets a chance to really find its fabric in the industry. So I think right now we're in a transition phase where regulation is required for institutions to find the trust to invest in this new asset class, and through that we need education. We need to educate, we need to share what it is and what the risks are particularly. Because it's an immature technology, we need to all be realistic about that, and there are pros and cons right now on raising funds. One of the pros, I'd say, about security token offerings is what Nicola just mentioned, the fractionalized ownership, so that you can just own a little bit of something big. And that will create extra liquidity and also a premium on the underlying asset. And that would mean that we can all participate in a security across borders. What comes with that, though, is the legal side. So as was just being alluded to, I have an experience of setting up a security token offering myself. And if you're looking into that space, instead of an ICO, then you just need to be aware that there are specific legal requirements for every single jurisdiction that you're offering your security token to. So we have a working relationship with lawyers in many different countries in the world, and you need to account for a fair amount of budget to get your security legal advice to offer your security token in these respective countries. So yeah, that's sort of where we are right now, and things to consider if you're looking at raising money by these new ways of tokenization.
Great. Yeah, Ali?
Yeah, so it's a good question. So first off, I don't provide financial advice, but I'll tell you some of the perspectives that we have from Blockchain Founders Fund and how we look at this. So we break it down into a couple of ways, right? So first side, you've got ICOs. There has been, of course, a major hype cycle. There's a major problem with certain types of ICOs that have a problem with the way interests are aligned, right? So if you have a company that has interest to maximize shareholder value, and then you've got a token related to that, there's generally a problem, because essentially we find that it doesn't actually work that well, right? Because basically you've got your shareholders and directors that are essentially looking to use that as a way for like non-dilutive equity, but their interests aren't aligned with those token holders. We, however, do see interesting opportunities for potential ICOs in the future that are structured as real utility tokens that actually have generally foundations as part of their setup. I mean, some examples in terms of good governance or better governance could be things like the Ethereum Foundation and how that's set up, and that is a real utility token that we see intrinsic value in. On the security token front, I am an advisor to Polymath, which is a well-known company in this space, and we break it down into a couple ways. So security tokens have huge value because of course, there's an underlying asset, and there's benefits such as fractional ownership. There's, of course, benefits potentially in the future in terms of liquidity. There are a lot of challenges, though, to think about, right? So as of now, there isn't really tons of liquidity on this, and it is a process that's going to take time to build liquidity on exchanges for private securities. There's also the challenge that many of these private securities probably will never have liquidity, right? So think about how much due diligence you need to do to invest in a private security, and for many of these, that will be very difficult for traditional investors, right? And there's also a lack of oversight at times from, say, very strong audited documents that you can rely on and additional transparency. So this is where there's certain challenges with it, but it is a very exciting space where we do see clear value if they're structured properly and you understand the underlying interest of what the security represents. But there's also some interesting and funny stories about how we've seen that very misaligned still under a security token structure.
Great. What I would like to understand is what is the key difference between a company raising funds through a crowdfunding platform such as funding societies or Mintress or Crowd vis-a-vis through token offering? Because we've seen a lot of projects today sharing their blockchain dreams and ideas. What should one consider? Since there are a lot of entrepreneurs over here, how do they decide? Should we go to a blockchain token offering route, or should we go through a crowdfunding platform? So maybe you may want to share if a project comes to you or if a company comes to you and wishes to raise fund from your crowdfunding platform, what would you look at before onboarding, or maybe even thinking of giving him an advice that this is the right project for your platform?
I believe at funding societies, when borrowers do actually come to us, they already know, or they kind of know that the kind of money that they're raising is not for equity, and it's not going to be through the form of an ICO or a token, and it's purely debt. And a lot of them come in to us to look for actually very short-term bridging loans. These are just to really identify and to address the cash flow issues that most local SMEs tend to face, simply because of the credit terms that some of their buyers or their customers normally tend to have. So this delay or this little drag in terms of duration, whereby they don't have funding to run their operations, to work on these projects that they have bidded for and they have been awarded, is normally the gap that funding societies looks basically to address and to bridge.
Yeah, I mean, at Mintress, we see all sorts of people coming to us in terms of wanting to raise money. Generally, they know that they come to us to borrow, i.e. to raise debt. But we do have startups, all with projects and all that, they come to us and say, oh, can I raise money and all that stuff. So we typically move them away to an equity crowdfunder, for example, or if we believe that we can help them, we can do a convertible loan, for example, because some of investors are interested in that. But generally, like what Sean says, people are pretty clear in terms of what they want. Do they want to do an ICO, STO type thing, or do they want to borrow money to bridge their funding gap and all that? So we see quite a clear distinction and people do know what they want, whether it's people based in Singapore or Malaysia or Thailand or around the region.
Nicola, my question to you would be, since Crowdo is into equity crowdfunding, one of the key difference which I see vis-a-vis equity crowdfunding and token offering is If I have to raise funds through tokens as a entrepreneur, I don't have to give up my equity. So now I have to make a choice whether do I go for an equity crowdfunding platform or token. Having said that, with the ICO fad, I think is over. You think people will go back to equity crowdfunding because projects are not getting funded through ICO route. So you think equity crowdfunding will come back into the limelight?
I think if you want to compare equity investment with crowdfunding with ICO, I think that is really a distinction that is made from issuer point of view for the company want to raise money, because the investor base is completely different, right? So equity is a very old and traditional product, right? So if you are an investor and invest in equity, you get your share certificate, right? Which is registered to whatever is the authority in that country, and you actually own a share of that company, right? And you will be able to make money by reselling the share, right? A lot of the people a lot of investors that are equity investors, they, even during the ICO hype, they will keep investing in equity, right? I think ICO, as was mentioned before, it had a lot of hype in 2017 from the retail investor, which they were not equity investor before, right? On the let's say entrepreneur company side, you are right? So the beauty of the ICO, it was that you can raise as much money as you want without diluting your ownership. But that, for me, raises a question: if I'm an investor, so what are you giving me? Nothing, right? Or promises, right? So what will be your stake to honor that promise, right? And that's why the ICO hype kind of died out, right? Different stories for the STO, right? STO is linked to something which could be equity, could be profit, could be revenue. So there is some kind of connection with what we call the real economy, right? Or at least the real performance of the company. So STO is very close to equity investment. STO might be the evolution of equity investor because they actually, STO actually, from my point of view, deliver value the equity crowdfunder never being able to do, which is liquidity or secondary market, right? So if you invest in a company to equity crowdfunding, or if you get equity of a company, your investment horizon is probably 5 years, and the ability to get out of that investment or cash out is very difficult before the 5 years, before a liquidity event, which it could be trade sale, IPO, or a next big round of investment. What STO brings to the table is the ability to trade at kind of through a normal market valuation, your share even before. And that is quite interesting from my point of view.
Great, that was very insightful. I'll take it from there. Yuri and Ali, Nicola said something very interesting. When you are going for a token offering, it's just promises. So what you get is actually tokens. And most tokens have got very little use case. Or if not use case, the price point drops to a point where you have literally lost 60 to 80% of your investments, and that's what has happened. So if regulators were to come in and regulate the ICO space, and now we're talking about STO, can really STO prevent the crash of the cryptos? Because it's ultimately still tokens, but it's just a security token which is regulated. This is how I see it, but then of course you guys are the experts, you have functional knowledge of it, and you can share it with with all of us, your knowledge and experience.
Yeah, so I'll take the first plunge. I think when you look at ICOs, there was no underlying asset really backing the utility token, right? So it was a new way of speculating on the value of that underlying token. Now that a lot of money has been drained out of the market, i.e. mostly retail investors have lost money, obviously regulation kicked in because the regulators are there to protect the retail investor, right? So if you compare the ICO space with the STO space, then The security token and the monetary authorities of Singapore, one of the reasons why I came to Singapore is the fact that there's so many people believing in this new technology, moved over to Singapore. But I'd also like to add the regulators are very pragmatic and they're very transparent and clear on the guidelines for a security token or a utility token for that matter, right? So what Singapore basically says is we have a Securities Act, and the Securities Act is exactly the guideline for setting up your security token. There's no like additional documentation around it. It's very clear. So I think that is an advantage that we have over here. And with that, why I'm saying that is that a security token is essentially a security. And it's being tokenized, which is a new way of transacting value, but it's exactly the same thing as a security. One thing I'd like to add, because we are a digital innovation powerhouse, so we look at innovation. I think this is the aspect that many people do not yet understand, that security token has a lot of potential for innovative new ways of transacting value and data. And one example there, that's why I think that security tokens, to your question, will have less of an upside, but also less of a downside. So there will not be this like 100x and then like a 90% drop, most likely. It's not financial advice here, but security tokens are backed by an asset and are regulated, right? So it's a different environment. So what security tokens can offer, and that's what we looked at last year, is actually instead of returning a dividend to the shareholder, you can, for example, say you look at the top line revenue. So a company makes revenue. That revenue is immediately shared with the token holder, with the shareholder of that security token. So you do not like wait for costs to be subtracted, and then there's profit, and then there's dividends. So there's new ways of treating a security token and how that interacts with the return to the investor. So that's something I want to share, and there's many more aspects relating to smart contracts that can self-govern the economies around it, but I think that's something we need to look at, the advantages of tokenization of securities. Yeah.
Okay, so I'm going to quickly jump on a point where I actually, from our fund perspective, we don't fully agree on looking at certain things like revenue security tokens. We actually think in most cases it's highly negative to the interests of a company. For example, if you're giving away top line revenue, how do you stay competitive when your business gets more competitive? Because you're going to basically run your company into the ground by giving away part of revenue and then going bankrupt. So like we do see issues with this. Of course, if it's like a cash cow type of business, it's different and maybe it makes sense. Or if it's like music streaming and you're giving away part of like every direct sale, maybe. But it still makes it difficult to be competitive. But we look at it in a way where in ICO, what companies were trying to do was put a value on the token economy and velocity of money. A lot of these token economies that they had built were broken because they didn't have economists look at it and build it as ways that economy should work. And so most of those fell apart. A lot of them, won't recover. There are still some interesting ones, of course, with the way certain ones work. There is intrinsic value in our opinion on Bitcoin or Ethereum or some of these where there's clear demand and supply. But if you take the security token side, and we wrote an article in the Crypto Investment Times magazine that's pretty in depth on this, which is the December 2018 edition. We break it out into 3 structures. So you basically have a company ownership side, which can be like dividends, revenue, equity of the company, and then you've got your asset side and your liability side. So you can actually tokenize any of these components. And it is very interesting, of course, if it's something that can have liquidity. So if it is something where there might be demand, it can be very interesting because now you can transact it and solve some of these illiquid periods. One of the other things that at times gets missed with security tokens that I think is among the most important aspects of them is for companies looking to raise across different jurisdictions. So you're now trying to raise, say, across 5 countries or 10 countries. Part of the idea of security tokens is to and Polymath's working on this, is to streamline the costs related to, say, getting lawyers in all 10 countries to do everything all over again. Part of these jurisdictional requirements in every country are being pre-programmed into the token. And so now instead of needing full sets of lawyers in 10 countries, maybe you can have a lot of the generic types of rules, like 90% of those essentially put into parts of the process related to the token, and now you might only need legal support for 10% of what you needed. And so this is one of the big benefits from a fundraising perspective that's very valuable related to security tokens.
Great. We're talking about regulation and STOs, but honestly, I think very few people have actually had experience working with the regulators. So this question, I'm not going to only ask the panel speakers, but I'm also going to get the audience involved in this question. So I'll start off with Sean, because funding societies, Minterest, and Crowdo, all three crowdfunding platforms have got licenses from MAS. So I'd like them to share with all of us what has been their experience talking to regulators. What are they looking for that makes them comfortable before they issue a license? Is it custody, compliance, founder's background? And Yuri and Ali, you guys have worked on ICOs and STOs now. So obviously when it's STO, you're talking about dealing with regulators. And I would also ask Krishna from the audience, because he has also worked on the STO side, and maybe even Pooja, if you don't mind, from the audience, to just share from, and we're going to make this like really short. So just your quick experiences of dealing with regulators.
For funding societies in our space, I think one of the things that they looked out for, and one of the things that we did even before it became a regulated activity or we became a regulated entity, was to hold the funds, the investors' funds, in an escrow account, in a trust account. So basically, regulators wanted to make sure that there was no misuse of funds, most importantly. And secondly, all documents or all screenings were done in accordance with MAS's regulations, same like opening a bank account anywhere. So I would think those were the two main things that they were looking out for from us at the start, to make sure that things could go well.
And how long did it take from the time you approached them till you got your license? What was the duration?
My understanding was that it took about 4 to 6 months. Yeah.
Oh, that's pretty fast. Yeah. Okay.
At Minterest, we find that the MAS has been pretty good, pragmatic as well, in terms of trying to regulate a space that I think they were quite unfamiliar with in 2016. And for Minterest, unlike funding societies, were a bit younger. So before we could start, the regulations kicked in, we applied, and we got our license based on, I guess, our CVs and all the policies and things we're going to put through. So generally, I think MAS has been pretty good in terms of supporting not only us, but I think just generally fintech, basically.
Yes. My company, we went through regulation in 3 countries, Malaysia, Indonesia, Singapore, and we started to engage regulators when there was no regulation, right? So let me tell you that first, it's a good thing when regulators start to get involved in your industry, because it's a sign that the industry has become mature, right? So it's costly and difficult to deal with regulators, but it pays back on the long run. That's one. The second is that there are 2 phases when you engage regulators, right? One, if the regulation is not there yet, then you are engaging in designing the regulation, meaning roundtable, public consultation, and that is a very long process, right? But the good part of being on this part of the world, at least, is that the regulators has, one, they understand that you need to run a business, right? So they understand that, yes, we need to protect investors, we need to protect participants, we need also to protect operators, but the operator, whatever they come up with, has to have business sense, because at the end, the operators, they need to be able to run their company, right? The second is that the regulator will evolve with you. We are talking about, if you're starting, like probably where you guys are right now discussing about how the regulation will be. It might take 1 or 2 years to get there, right? Because the regulators will evolve with you, all right? You will understand your business. There will be some different draft, variation of the regulation. So it's a process, right? After that, when the regulation is in place, then it's about applying for it, right? And that is it's just a process, right? So it will take 3 months, 6 months, 8 months.
Yuri and Ali, your experience with the regulators, in brief.
Yeah, so I'm actually going to give an advice. So I would look at different jurisdictions. Like I wouldn't just take our word for it. So what we did, we had a working relationship with lawyers in Singapore, Thailand, Japan, Korea, Cayman Islands, US, the Netherlands, Estonia, all the bunch. So we've talked to all lawyers there. And I think this is a very dynamic space. Like regulators change, regulators evolve with the industry, as was alluded to earlier. So if you look at, for example, Switzerland has been very clear on 4 different types of tokens. And the reason why they're very clear on this is because the industry has been co-developing the regulatory policies with them, right? So I would really look at countries where this connect is really there. The industry is connected to the regulator. Singapore is a very good example of that. So I'd suggest you start with connecting to law firms, start talking to people you meet around at this conference. They're in different countries. They all have some advice, and properly test that advice before you make your decisions. Yep.
So I think a lot has been covered here. So I'll look at it from a little bit of a different angle. So one of the things that we're doing is we're writing the flagship report for the United Nations on emerging technologies. We're working with a lot of central banks and finance ministries and key decision makers as parts of governments, including regulators. And as part of that, some of the big concerns are essentially, that have not been mentioned, some of the big concerns are looking at things like, how do you actually deal with digitized securities and identities? And so like looking at things like KYC is very important for them, looking at anti-money laundering and counter-finance terrorism. And these are some of the things that are really important to them in the challenges of how do you actually move digital securities, especially when the underlying infrastructure or the way these countries' registries are set up are not digitized in the way that allows for this. And so this is where this will evolve over many years, is moving into actual frameworks and underlying layers that allow for these digital securities to operate more effectively rather than being essentially a middle layer to the way that it currently runs.
Yes, and Krishna and Pooja, your experience as well, very briefly, in Singapore context and Pooja
Right.
in the international context.
Well, from a Singapore context, I guess 3-4 years ago, we were already advising crowdfunding platforms on how they could be operating. The good thing is, as they mentioned, the MAS evolves. The MAS, to an extent, actually puts us out of a job because they've got fantastic guidance notes, which is actually good for the entire community. Even in the crowdfunding space, they've just come out with new rules in terms of the kind of information you need to come out with so that the investee companies are very well represented, because the gap there is the analyst or the lack of analyst research for those investee companies. So I think we're pretty good on the crowdfunding platform. The thing about the STO, perhaps just address a couple of questions there. I think the flaw right now we have in the commoditized platforms is that it's not something you can do at home. It's a highly nuanced space. There has to be a proper business modeling that's done. You can't just put in various parameters for a company and expect that it'll just churn out, whether it's a dividend or whether it's an interest or whether it's a top line revenue, assuming that you can actually, as a shareholder, take that out. But you could also have a hybrid version, which is a variety of that, and even kind of divorce it from it being equity, but just a contractual financial obligation. And the last point I had was, I think the main difficulty would be, I alluded to it earlier, the arms race for the actual protocol stack. You've got obviously ERC 1400 for those that are looking for a more open source, and then we've got Polymath with ST20. The problem there is, when there are competing platforms, and when we really need to have interoperability, if you like, within jurisdictions, it's going to be tough. I hope in an ideal situation you would have, 95% of our work taken out from that, quite frankly, because as lawyers, we would like to advise on the more value-added stuff, but there are distinctions which are drawn. Even one just very quick example, which is the redefinition of accredited investor. It was just redefined literally, recently, a few months ago. But if you don't have constant, updates on those, that'll be difficult. But I think kudos for those platforms that are trying to commoditize it, because that's going to be the key, especially the advisor costs, which are being reduced and if not taken away.
Thanks, Krishna. Can we have the mic given? Oh, yeah.
I've got a
Pooja,
mic.
from your side, please.
Sure. So just some quick perspectives from my end. I think, just to add to what Yuri said, I think more so than ever before, you really need to have an on-the-ground understanding through your lawyers or other intermediaries as to how the regulations work in practice. Because just by reading the rules on a website somewhere, you're not going to really get a feel of how easy a regulatory application for an innovative service or offering is. I mean, we had so many inquiries come in for Malta, I think about 6 months ago, and then ultimately it turned out, oh, it's actually not that simple after all. It's going to take 9 months and various unclear criteria. So more so than ever before, you really do need your lawyer to be the trusted advisor who's going to tell you the real deal and not just, sort of the marketing guff that you see. And in certain senses, it's kind of, in my view, things have come a full circle in a regulatory context. There are countries which regulate specifically and try and create sort of safe harbors for innovation, but just because everything is so new and evolving, it's still not as easy as they make it out to be. So sometimes it's actually easier to go to jurisdictions where they've chosen not to regulate this at all. And that's not necessarily a bad thing. It just kind of makes it easier to have that space for innovations. So as an example, Cayman BVI, there's still a lot of room to set up structures which don't invite regulation on day one. And then you only need to address regulation for specific aspects in the jurisdictions that you're offering, not just simply because you set up in that jurisdiction on day one. So that's my view.
Perfect. Last question, Jess, if you don't mind, to the entire panel, and I want only a one-word answer. Okay? So what is the future of crowdfunding? Is it property crowdfunding? Is it individual loans? Is it stable coins? Is it DSO? Is it tokenization of businesses? What is the future of crowdfunding? In one word, from your side, please share with all of us.
To be very honest, my one word is everything. I think it's everything that you just said. Everything is possible.
I don't think it can be answered in one word, but if it is, 2 words for me, who knows?
I would say digital banking.
Yeah, I need to say any asset. Yep.
Those are all good ones. I mean, if you can do due diligence on it, so due diligence.
All right, thank you so much. Let's give a big round of applause to the panel speakers, everyone.